Welcome back to Better Financial Health in 15 Minutes or Less. And I'm Stacy Hyde, and I'm here today to talk about something that's been in the news a lot lately, but it's a little bit like a broken record. It's the Shutdown Showdown, we'll call it, because the two parties can't agree. So one party says we're going to shut down the government. One party says we have a bill, you should pass it. And it really depends on who's in power, which way it's going to go, or who's saying that, you just have to pass it. In this case, it's the Republicans are saying that and the Democrats are saying no. Previously, when the Democrats were in power, it was the Democrats telling the Republicans you just had to vote for it. So it's this cycle, and it's scary. And I will admit, the first time we ever really lived through one of these, it was really, really scary because we didn't know what to expect. But the thing to remember about a government shutdown is it is us hitting our debt ceiling. It's not that we're defaulting on our debt. We are still paying our debt. It is costing more than it used to with interest rates being higher. But what it does impact is it impacts a lot of frontline things that we see. It can cause services to go. Usually where you see it the first is in national parks shut down because the park rangers are not getting paid. You'll see reduced TSA staffing because some people won't come in, or they'll call in sick since they know they're not going to get paid. And you need help getting a new passport, as a lot of people in our office do here coming up. Those processing times can get extended if we have a government shutdown. And if you have a question with the IRS, that's going to slow down. It is disturbing for markets, but if you look at history, as long as it doesn't get extended, and by extended I mean more than a few days or a week, generally speaking, markets shrug it off because no politician is going to risk putting the U.S. into a situation of default, nor do they want to go back to their constituents at home and say, yes, I shut down the government, and that's why you can't do X, Y, or Z. So I do think it'll be somewhat short-lived. We do need to figure out and get our financial house in order. That's the topic for another day. Occasionally, Treasuries actually rally in price, which means yields go down, which seems a little bit like an oxymoron. But generally speaking, stocks can get wobbly. You'll see volatility go up, meaning bigger swings day to day or even hour to hour. But on the whole, shutdowns have not really had any impacts on the market. And the key thing to remember is it is a short-term blip. So it's not something that you want to try to make wholesale changes in your portfolio for. And the thing is, your job as an investor is not to try to predict everything Washington's going to do, because it doesn't make a lot of sense most of the time. And so if you're trying to do that and invest according to that, you're likely to buy and sell way too often. But if you stick to your long-term plan, have some cash reserves to get you through, that's generally all you need to do, and then go live your life. So that's it for this episode of Better Financial Health in 15 Minutes or Less. And if shutdown headlines have you stressed, share, and this has helped you kind of settle down and realize that this too shall pass, please share it with a friend that may be panicking a little bit more than you were. Thanks so much. Have a great day.